Good afternoon, everyone. Gogold Resources is a Canadian-based mining company primarily engaged in the exploration, development, and production of precious metals, specifically silver and gold, with all operations concentrated in Mexico. The company operates through two main sectors, mining operations and exploration. The mining operations sector centers on the Parral Tailings mine, located in Chihuahua, Mexico, which utilizes a heap leaching process to extract silver and gold from historical tailings. Parral has been operational since 2014 and serves as the company's primary revenue source. The exploration sector focuses on the Los Ricos property, comprising Los Ricos South and Los Ricos North, spanning 45 concessions over 24,000 hectares in Jalisco, Mexico. This sector aims to expand the company's resource base, with Los Ricos South advancing toward a potential production phase following a feasibility study, while Los Ricos North remains in the resource definition stage. This dual-sector strategy balances immediate cash flow generation with long-term growth prospects. Several strengths underpin Gogold Resources' position in the market. Financially, the company demonstrates resilience, as evidenced by its second quarter 2025 results, which reported revenues of $17.6 million from the sale of over 555,000 silver equivalent ounces at Parral, generating an operating cash flow of $5.1 million and increasing its cash reserves to $78.3 million. This liquidity, combined with a debt-free balance sheet, provides flexibility to fund exploration without significant financial strain. Operationally, the Parral mine benefits from a low-cost heap leaching method, achieving an all-in sustaining cost of $22.98 per silver equivalent ounce in Q2 2025, which enhances profitability amid favorable silver and gold prices driven by industrial demand and global economic uncertainty. The Los Ricos project offers substantial growth potential, with production projections estimating 8 million silver equivalent ounces by 2027 and 15 million by 2028, potentially positioning Gogold as a significant player in the precious metals market. Additionally, the recent implementation of the SART zinc circuit at Parral has improved gold and silver recovery rates while producing a saleable zinc precipitate, further boosting efficiency and revenue. Despite these strengths, Gogold Resources faces several critical weaknesses that warrant scrutiny. The company's revenue stream is heavily reliant on the Parral mine, which poses a concentration risk. Any operational disruptions, such as declining ore grades or unforeseen shutdowns, could significantly impact financial performance. The Los Ricos project, while promising, remains in the exploration and pre-production phase, introducing uncertainty regarding timelines, costs, and economic viability. Exploration activities are capital-intensive, and there is no guarantee that Los Ricos will transition into a profitable operation, potentially straining the company's resources if Parral's output declines. Moreover, Gogold is exposed to the volatility of precious metal prices, which can erode margins if market conditions deteriorate, particularly given recent inflationary pressures that have slightly increased operating costs. Operating exclusively in Mexico also introduces geopolitical risks, including regulatory changes, security concerns, and potential community opposition, which could delay or derail projects like Los Ricos South. These vulnerabilities raise a critical question: can Gogold effectively diversify its revenue sources and mitigate operational risks before Parral's reserves are depleted? Key financial figures provide a quantitative foundation for this analysis. In the year ending September 30, 2024, Gogold reported annual revenues of $37 million, a 20% increase from the previous year, driven by the sale of 1.4 million silver equivalent ounces at an average price of $25.95 per ounce. The company produced 1,482,391 silver equivalent ounces, comprising 553,382 ounces of silver, 8,700 ounces of gold, 468 tons of copper, and 316 tons of zinc. The adjusted cash cost was $17.62 per silver equivalent ounce, with an all-in sustaining cost of $24.15. As of Q2 2025, Gogold maintained a cash position of $78.3 million, reflecting strong liquidity. The stock price has shown moderate stability, ranging between 1.00 and 1.50 Canadian dollars over the past year, with a market capitalization of approximately 400 million Canadian dollars, classifying it as a small-cap stock with elevated risk but growth potential. What motivates an auditor to examine Gogold Resources? For an investor, the allure lies in the company's growth trajectory, particularly the projected production increase at Los Ricos, which could yield significant returns if successfully executed. Analysts might be drawn to Gogold's financial health, with its substantial cash reserves and low-cost production model offering a buffer against market volatility. Students or researchers may find Gogold an intriguing case study for understanding the dynamics of the junior mining sector, particularly the balance between operational stability and exploration risk. However, auditors must grapple with key questions. Will Gogold secure the necessary permits for Los Ricos South in 2025 as anticipated and transition smoothly into production? How will the company manage geopolitical risks in Mexico, and can it navigate the inherent uncertainties of exploration to deliver on its growth promises? In conclusion, Gogold Resources presents a compelling yet complex investment profile. Its strengths, including a robust financial position, low-cost production at Parral, and significant growth potential at Los Ricos, are counterbalanced by notable risks, such as revenue concentration, exploration uncertainties, commodity price volatility, and geopolitical challenges. Auditors must carefully weigh these factors to determine whether Gogold's growth prospects outweigh its operational and external risks. This analysis underscores the need for a nuanced approach to evaluating junior mining companies, where potential rewards are often accompanied by substantial uncertainties. If you found this analysis insightful, please like, comment, and subscribe for more in-depth financial discussions. Thank you for your attention.